see the market monitor screen?
Yes.
All right, it's 12:02 and I'm sure more people are joining us, but we'll go ahead and get started, and I'll try to keep an eye on the chat box and see if there's any conversation. But how's everybody doing on this crazy 2021 Friday in real estate? So I was just going to kind of go over in general the numbers today. I know the last time we went over some more specific economic numbers, but just wanted to go over market monitor. So I'm just going to do everything as a whole, so all of MLS, and it's quite amazing, what we're seeing here. So here's, median sales price. So look at the jump. Now, again, keep in mind, this is year over year. So if we look at March 2021, we're 17.4% higher than a year ago. So if we look at last March, we were at 287. So 287 to 337, that's $50,000 more. Now, keep in mind, what's going to be very interesting moving forward is, I know, I think schools shut down. I think the first day that we didn't have schools and we were going into the shutdown was like March, I think it was March 16th of 2020. So look at March. If we look at last year, look at March, April, May, June, right? If we look at that time period, very flat on pricing, right? But that was all because of the shutdown. I mean, contracts were falling apart. People weren't writing offers. People weren't listing. I mean, that was a messy period in real estate right in there. So you can see how flat that was. And I just wanted everybody to realize that is not ordinary for spring, right? This is not a normal trend. If we go back, if we go back to 19, April, May, June, right? An upward trend in prices. Go back to, here's 2018, February, March, April, May, an upward trend on prices every year. So what's going to be very interesting as we move forward is, obviously I think we're going to still have this seasonal, push up on prices, which we're already feeling right in here. Look at the jump from January to February to March, right? So if we continue this trend, watch once we go to April, May, and June, these numbers are even going to get higher. So I believe these numbers will even go higher. We're probably going to be in the 20 to 25% year over year increase in prices, which is phenomenal because of how flat we were right in here. So this number, I think, as we look in the next 3 months, will actually go higher than even 17%. But keep in mind, 17%, that's $50,000 higher year over year. So that's a trend to watch going forward. Here's price per square foot, 13% higher. So we're seeing that same kind of upward trend, especially the last couple months. This eventually will be driven by new construction. If it's more expensive to build a house, well then, that price per square foot is going to continue to go up. But it's interesting, the sales price is actually ahead of the price per square foot. So here's percent of original price. Now, if we zoom in, so you can see the trend, right? Every year, here's the trend. We peaked out for a few years in a row about 98.5%, but look at this steady upward trend. And I believe MLS is broken here. We're over 100%. So the next few months, if we go back in time, so if we go back way back, see how in 2005 and 6, it was 100%, it was over 100% back here. So I believe there's something wrong in their system that for whatever reason, it can't show over 100%. So don't assume it's just 100%. I know a contract yesterday that came in and it was a good 10% over list price. So there are houses closing 10% higher than list price. So that's adjusting the numbers pretty dramatically. And our percent of list price is definitely over 100 at this point, and we'll probably stay there for quite a few months. Zoom back into maybe 5 years. So you can see we're eclipsing 100% at this point. Days on market. So days on market, again, pretty phenomenal. We're down to 4. So 4 days on market. Last March, we were at 24. So, and we were in the 20 to 30 range for quite a few years, right? If you look at 16, 17, 18, 19, you'd have your your slow pace in the winter, and then you'd have your fast pace in the summer. So we were hitting a high of 30 and a low of 20, but now it's 4. So why, 4 days on the market, that's about as long as it takes to gather all the offers and decide which one you're going to take. So if you have houses on the market that have been on the market for 30 or 45 or 60 days, the market has spoken very clearly that it's priced too high. I'm not saying every house has to sell in 4 days, but if you're not getting some instant results and activities within a couple of weeks, there's enough absorption on the market. That's the market telling the seller that they're priced too high. Months of supply. So we're down to 0.8 months. So here we're 77% faster than a year ago. So last March, right here, we were at 3.5 months, which again, historically, if we go way back in time, historically 3.5 months is very fast. If you go back to this historical trend, the only time we were faster was just pre-recession. So this, even a year ago, pre-pandemic, was a very quick market. So now we're almost 5 times faster than that. And I mean, anybody who, I know Alan's on this call, I don't know who else is on this call that was in the business back then. I mean, Karen was, Frank was, Bill Bird was. I mean, there's quite a few people in here. We are a good 3 to 4 times faster as a market now than we were even pre-pandemic. Again, we got down to 3 months. We're under a month right now, and that's all of MLS. So if you look at certain parts of MLS, it's even faster than that. So I mean, that's pretty phenomenal that we could get down to that quick of a market that we're 0.8 months of inventory. So again, where's this trend? Well, anybody see any change in this trend? It only looks down, right? And even if we zoom in, so if I zoom into the past 3 years, I mean, this trend is not flattening out yet. And again, we're going into that spring time period where, we're typically going to sell more houses in March, April, May, June. And again, 2020 was not your typical seasonal trend, but in 2021, we might be returning to a little bit more of that, the typical season where your spring, summer will be higher. But it's still, I think, adjusting to some degree. I mean, we only have an 8-week summer in Charleston County for the kids. So if people want to move without their kids going to school, there's an 8-week window. So is that going to make it a really, really busy kind of late June, July, early August? Is that 8-week period going to be where people with kids in school try to force a move in that window there? Or are we just in this period, it doesn't matter what week or day or month it is, people are still going to just, buy when they want to buy. So it'll be very interesting to see what happens. But I mean, we are, in this downward trend. And I mean, we were still on a downward trend even before. If you look at this, I mean, we did flatten out a little bit, but overall it was a downward trend even pre-pandemic. So we are just continuing that trend all the way down to 0.8 months. Homes for sale, I mean, this is pretty remarkable. We have 72% less for sale than we did last March. So last March, we had 5,606 homes for sale. This March, we have 1,563. And we're sitting, I looked this morning, we're sitting right about there. The lowest number that I saw was 1,450. So that's the lowest number that I've seen as active in MLS. We're a little bit higher than that right now. I feel like we're in this bottoming process over the last 3 weeks. We've been trying to find this bottom on inventory. We'll see what the next few weeks brings, if the spring summer market, if the listings are hitting. But we are, from a standpoint of the absorption, and the demand is still so high. As soon as houses hit the market, they're getting absorbed. I know of one yesterday, an agent in our office sold. They had, I think it was 40 showings within a day, 16 offers. And it went for well over full price. So you have 15 people that missed this house. They're waiting for the next one to come on. So that's the problem, is the demand is so far above the supply that, as soon as houses hit the market, you have this instant reaction to it. So this homes for sale, again, look at the trend. You can't tell me yet that it's bottoming out. I mean, I've been watching the numbers on a daily basis. I think we are kind of in that 1500 range trying to form a bottom, but I'm not ready to say that that is going to be the lowest we get yet, but it looks like we're trying to form the bottom. And again, I hear more listings that are potentially coming on the market, but the problem is so many houses are selling off the market, or they're instantly selling when they hit the market. We can't build this up at all. And then we do need to get back to 5,500. We need to get back to this range in here to have a more balanced market for buyers and sellers. If we're selling over 2,000 a month, even if we have 6,000 for sale, that's only 3 months of inventory. That's still, by everybody's terms, a seller's market. I mean, even if we go to 1,500 sales a month and we have 6,000 for sale, that's 4 months. I think that's a fairly healthy market for buyers and sellers, but in my opinion, we're probably years away from getting there. Here's the closed sales. So I know there's still some sales probably entering for March, but we made 2,168 that were put in MLS. Keep in mind, there's a lot that were not in MLS, but the only month I think we had higher was July of last year. We did 2,400. So I think this is, it surpassed October. This is the second highest month ever in Charleston history in March of what is entered in MLS. So, I mean, that's 28% higher than last March. Now watch what happens again. Look at April. So March was 1,689. Look at April and May. They were down from March. So watch this number the next 2 months. This could be 40% higher than a year ago. So again, you gotta take with a grain of salt all these national media articles that say, hey, sales are up 40%. Well, that's from when we were shut down. So that's not a real fair comparison. So, yes, they're all-time highs, but it's, part of it is when you do a year-over-year comparison of the next, March, April, May, and to some degree June, it's not a real fair comparison since the market was at, almost at a standstill a year ago. So again, 28% higher than last year. And you can see January and February were not bad months by any means, but also not in that 2,000 a month because those were November, December contracts. So, you can feel the March, April difference from November and December, just everything's getting multiple offers and instant success for sellers. And that's what's happening right in here. And if you go back, let's go back in time. So if we go back, way back, you can see the seasonal cycle here, right? And if you look at where we're at right now, I mean, we're in a different level than we ever have been, even pre-recession. And if we get rid of this, monthly, look at this rise here coming out of the shutdown. So, I mean, in the past 12 months, we've made 23,000 sales. The highest ever before was 18,000. So we're 5,000 higher than we've ever been of what's entered in MLS. Sean was asking what's the number for, if we go back to the monthly. So in 2019, in March, we did 1,578. So we're still significantly higher than, the March of, pre-pandemic. So we're still significantly higher. Yeah, and I don't know, maybe if somebody has a contact at the board, they've got to be able to, Bill Bird's point, they've got to be able to correct that 100%. I don't know why that's causing such an issue, with the market monitor system, but I might put in their help desk. Maybe they can try to fix that because it'd be very interesting if we're 101%, 102, 103. I don't know. I mean, at some point, we could be in that 102, 103, percent of list price. And Daniel's comment, I mean, when I talk to agents from around the country, everywhere seems to be, kind of an all-time low for inventory. And this is, in Bill's comment about Virginia Beach, everywhere is, there was an agent in Austin, they got 95 offers on one house. So, I mean, this is happening across the country. And I mean, probably more so in the Southeast and Austin and some parts of the country are probably even more influenced by this, but all parts of the country are experiencing this type of market conditions that we're going through right now. And then let me go back to 5 years. So here's new listings. So we listed in MLS 2,450 in March. Last March, we were at 2,289. So not 7% higher. Now keep in mind the second half of March last year, schools were shut down. We were shutting down. So I don't find this number probably that dissimilar to this. But part of what's happening is we're taking houses off the market before they even make it to MLS. And I don't know what the number is of properties that close that never make it into MLS even after closing. So these numbers are probably artificially low of people that are actually selling. And if we go back, so you can see the listing. I mean, back in 06, 07, we were listing 3,000 a month. So these are not all-time highs. This was recessionary, the problems with the recession right in here. So we're not at all-time highs on listing, but there is a lot of hidden inventory that we're not aware of at the moment. So here's on the pending sale. So look at this jump. So we're at 2,572. That's 57% higher than last March. So, when we look, and that's an all-time high. I mean, even if I go back, I don't think this is significantly higher. I mean, we never even made it 2,000 pre-recession. So we never even made it to 2,000. Now we're at 2,500. So if you look at that, we're making all-time highs. And then if we zoom in again, so if you look at this, last March, we were at 1,636. So again, April was 1,507. We're going to be 60 to 70% higher because this number is still going up, in my opinion. So we're going to be significantly higher even next month and maybe the following month. And Alan's point is like seasonality has lost a lot of meaning over the past year. Starting with March of 2020, it's hard to read much on a seasonality basis. Dollar volume. So I'm waiting for a couple more people to enter their listings, but if we get a couple more in March that close, we're going to be at $1 billion, which would be the second time. So we made $1 billion last July, and we're going to be very close. If again, if a couple of people enter them, don't be surprised in April, May, or June we're hitting $1 billion. And again, for perspective in time, so if you go back, even pre-recession, the highest we had was in the 525 million range. So we're twice as high in volume as we were pre-recession. A, prices are higher, B, the number of transactions is higher. So look at that, we're hitting $1 billion, which, again, we were doing 200 million 10 years ago. So we're 5 times the volume we were 10 years ago, which is remarkable. Yeah, big pay raise. Bill Bird's comment. Now, I wish they would plot this. I want to see a chart that's dollar volume versus agent count, because that's really what, again, I wish I could overlay those two charts, because you do total dollar volume, times commission divided by agent count. That's the average agent pay. So it's very interesting if I wish Market Monitor and all these MLSs would share that information, but it's not readily available. And then a couple of these in here. So I wanted to show this. So shows to pending. So here's shows to pending. So it's interesting that we are hitting, 15, 15, and 14 in March. So that's how many showings to go under contract. Now, this might be, not completely correct, because, I see so many houses that go active contingent right when it gets an MLS, or active pending, or active close, that according to showing time, that's 0 showings, right? So that's artificially keeping this number down. Like I said, that house that I know came on yesterday had 40 showings on it. So I don't necessarily trust this to be an accurate number. It's hard, when some people are using showing time and some houses just go under contract before they even come into MLS, it's hard to gauge this as an accurate number. Now, this shows per listing I thought was interesting. So we're up to 12.7 showings per listing. And I think this is reflective of, we have so few listings that all those buyers are waiting to see it all go look at it within the first few days before it goes under contract. So it's really pushing your activity. And I mean, this is what I recommend is that, if you got a seller, it's like, just prepare them. It's like, just be gone from your house for 2 or 3 days. Run a hotel room, just disappear and let everybody into your house. So, I think this is a sign of that instant activity, when a listing hits the market. It just, it's a different market when you have so few for sale and so many buyers. I mean, think about it. We're closing, here's the closed sale. So, I mean, we're getting 2,200 buyers closing a month, and there's only 1,500 for sale. So that ratio is like nothing we've ever seen before. And just to show you how different it is, if we go back, let's see here. So if we go back to closed sales, so I mean, our low,
Did you call me?
Our low and closed sales was 435 in January of 2009, right? And we're doing 2,100 right now. So that's 5 times the amount. So, and then if you look at homes for sale, so 435 buyers, in 2009 we had 11,000 listings, right? So you had 11,000 sellers looking for 400 buyers. And now we have 2,200 or so buyers looking at 1,500 for sale. So you can see how dramatically different that ratio is. So, based off that ratio, that's how you're getting that months of supply. And we look at that trend, it looked like we had flattened out pretty well, 2014 to 2020, maybe a little drift higher and lower, but we were a pretty flat market. And then the last year, and I think you look at other markets, it's the same thing. I mean, we hit a low of 4,000 in 2004. So think about how many more people are living here 17 years later and how many fewer listings we have. So yes, this is an unhealthy market for sellers, but this is an unhealthy market for buyers. We need to get some, we need to get some more listings, if we're keeping up this pace of buyers. And again, at some point, to have a transaction, you got to have a seller. We can't run out of sellers, otherwise we don't have any transaction count. So, I know a lot of sellers in the background, but as interest rates go up over time, it's going to be harder to find those sellers who are willing to leave their interest rate as well as their house. So it's just things to watch, over time. And we have the same thing when you look at land. The land is disappearing too. If you look at that count of land, it is going down pretty dramatically as well. And I don't know if Karen Abrams is on the call, but I'm going to show you. You can see how downtown even is changing pretty dramatically as well. Let me pull this up here for you. Let's see here. Gonna change this. So if I add an area, in fact, I'll just switch areas here. So you guys know you can pick different areas. So watch this. So here's area 51. So we'll pull up just downtown. So look at what's happening downtown, and we'll start from the beginning. So here is our median sales price. So it's still fairly flat. That hasn't, and again, there's less sales down there than the entire MLS, obviously. So the sales tend to jump a little bit. One way to get rid of that is this way. So you can see sales price doesn't reflect what's happening down there, right? So you're kind of, it does not look like the entire MLS. It's a pretty flat, if not downward market downtown, which is opposite of what we saw in the MLS, right? So, but kind of leveling out. Look at price per square foot. Kind of fell, stabilized, slight upward trend. Percent of original list price recovered somewhat, but still 6% negotiating. So where are we at in MLS? We're maybe 101%. Downtown is still negotiating 6%. So again, this is why it's very important to look at the area you're selling in to see what is happening precisely in there, because you can see this is a different market. Days on market. So days on market, look at that, 71 days on market. What are we at in MLS? We're at 4. It's a different market. Months of supply. We're at 11. 11 months of supply. What do people call that? They call that a buyer's market, right? So we're an extreme seller's market in the MLS as a whole. We're still in a buyer's market, but tending to improve over time. We're slowly improving. Homes for sale. So homes for sale, we're still, 400, but you can see the last few months, we're starting to dip a little bit. Like if I zoom in a little bit, we'll see if this trend continues, but it stayed pretty flat and never really dropped to the level. Remember how much we've dropped in MLS as a whole? It was like 72% less listings. This is pretty flat. So it's very interesting across, south of the crosstown really hasn't changed, whereas the MLS as a whole dropped 72%. Closed sales, this is interesting, right? So look at the closed sales coming out. So we, again, same thing, the trend of everything, but we've gone from 357 to 495 a month. So you can see that trend has, sorry, for a 12-month period, I should say. So you can see that trend is higher. So the closings are coming about, which is telling me the sellers are trying to find this opportunity to unload their houses. Because the inventory is staying pretty flat. We've gained a lot in buyers, but we haven't necessarily decreased the inventory. So the sellers are coming out of the woodworks and they've been holding these houses for a long time and they're trying to get their houses sold. New listings, pretty flat, still, we had that dip, with the shutdown, but we're on a 12-month period. And if we zoom in, here's your monthly, it's still kind of a little bit of a seasonal trend. Pending sales. So look at the pending sales. Again, a big jump in pending sales. So downtown is showing signs of life of, trying to get back to a neutral market. Dollar volume, look at the dollar volume, up 44% in a year. And then, the shows to pending, again, kind of a little sketchy about that, and shows per listing increasing here as well. But I mean, the shows per listing, I think in the MLS as a whole was like 12 or 13. Here we're at 3. So if you're listing a house downtown, you might not get that immediate response and immediate kind of 40 people showing up at the house. It's just a different market. So again, I'm just trying to prove a point of, you still have to be aware of the market that you're in. And again, it's also from a standpoint of helping your sellers trying to decide. I mean, this downtown, it's like you can't be overly aggressive. You still have to be realistic. The comps might still matter. Some places comps don't matter anymore, it seems like, but it's all that matters is what the active competition is. But downtown is a different market. So again, it's so easy to go through here and you can pick your areas that you want to look at. You can even just pick a city, instead of doing, we could just do Mount Pleasant as a whole. So if we do, you can do Mount Pleasant. So again, median price, so the median price of Mount Pleasant, and if we do monthly, so we're up 16.4. I think the MLS was 17.2. So very similar year over year on that. Price per square foot. The price per square foot is actually higher in Mount Pleasant. It's a bigger change than even the sales price. Percent of original, again, we're at 100, whatever, we're up over 100 probably days on market, 3. So, I mean, that's amazing. Mount Pleasant at a higher price point is faster days on market than the market as a whole. Months of supply, half a month of supply in Mount Pleasant. So that's again, pretty remarkable for a higher price point to be a half a month of supply, 86% lower than a year ago. Homes for sale, down 83%. So there's 100, it's amazing. There's 137 homes for sale in Mount Pleasant. Townhomes, condos, single family, there's 137 total. That's pretty amazing. Closed sales, again, up 31% from year over year. New listings, we're hitting the market, but we need to hit the market with more listings than just this. Pending sales, I think the only reason the pending sales is not higher is because there's just not enough for sale, right? There's just, the new construction's not there. There's just not enough for sale to jump this by too much. And then the dollar volume's the same way. It's like, we could be higher, but you actually have to have houses to sell. So Again, it's nice to be able to dive down to any area that you want to look at and see what the market's doing. I mean, we did, so here we'll do, let's do an area here. Here's Daniel Island. So up 47% from last March. So if we go to last March, we were at 660. We're at 975. That's 47% higher median sales price in Daniel Island. That doesn't say every house went up 47%. That means half the houses are selling over $1 million, basically. So Daniel Island now, half the houses are selling over $1 million and half are under $1 million, is what that means. Price per square foot up 14%, percent of original. Again, we're at 100%. Plus days on market down to 3, just like Mount Pleasant. Months of supply 0.6, very similar to Mount Pleasant. Homes for sale. There's 28 houses for sale in Daniel Island. 28 condos, townhomes, single family homes. That's it. Closed sales. Again, closed sales. You can't have 28 for sale and hope to sell more than maybe 40. You know, that's not how the numbers work. You need more for sale to have more sales. New listings. So we're up to, 56 new listings in 1 month. Pending sales. Again, you can't get much more than 52 if you don't have anything for sale. That's up 85% from a year ago. Dollar volume. So again, it's hard to push these numbers higher without the sale, the active listings out there. So, I mean, the market is doing things that I never thought were even possible. And to Bill Bird's point on here, it's like, yeah, downtown was overpricing for a long time, but I think they're starting to catch the understanding of now's the time to move your properties. Some people are starting to price them right. Sure, some people are still overpriced, but you can see how downtown is still trailing the market, but it's also starting to improve. And again, when your opportunities on Daniel Island and Mount Pleasant are disappearing, downtown might become a viable option for some people. I read your Bill Bird, how are appraisals? I talked to a couple of appraisers. I don't envy them right now. Because they know they might get, hey, I have 5 offers at this price. So the buyer's expectation is it's worth it, but they might not have comps to show it. I've had some that have not appraised, but the buyer still purchases it. And I think that's happening quite frequently. I know a lot of people are also, waiving their appraisal, and they're assuming, hey, I've got the cash to do this. And that's what they feel like to win the contract. They're waiving appraisals, they're waiving home inspections. I mean, there's things that weren't happening. That was not necessarily happening pre-recession from my memory. People were not, that blind to just buying houses as is and waiving appraisals. That was not that common of an occurrence back then, but now it seems to be, the number of escalation clauses, the number of cash deals, the number of waiving appraisals and as is seems to be, in my mind, higher than I ever experienced pre-recession. And I think, at least for the next few months, this is where we are. Your buyer is going to have to be very competitive in their offer, especially, but again, look at, if they're making an offer downtown, there's negotiability downtown. There might not be multiple offers. I'm not saying that none of the houses are getting multiple offers, but when people are negotiating 6% off the list, that's showing to me the buyers have control over that market. But the rest of the markets, if you break them down, are pretty strong sellers market at this time. Bill, I wish I had that answer. Where do you think this is going? I don't see where, why would prices, again, everybody who's buying right now, they're very solid, well-qualified buyers with down payments and good credit and legitimate financing where the lenders are still verifying everything. This is just a different, it was a fake market pre-recession. You had liar's loans, you had people not putting any money down, you had nobody living in these houses. They all just wanted to flip and make money. It was just a different environment. So for me to think this is a bubble, I just don't see where it is. I just feel like you can't have this high of a demand and this low of a supply and think that there's any sort of immediate risk to pricing at this moment. It's just every deal that comes up seems to be pushing that envelope higher and higher. And if you think about it, let's say somebody's moving from Charlotte, just pick any city you want. Well, that person in Charlotte is getting 20% more for their house than they were a year ago. So why would they not just pay 20% more for a house in Charleston than it was a year ago? They will. So what do you think can change this? Watch the interest rates. That will, but it's weird. It's not necessarily going to be, to me, it could cause a slowdown, but not necessarily any sort of price risk. Meaning if interest rates go up, and anybody who's on this call that owns a house, think about what your interest rate is. What if rates were 4.5% or 5%? Are you going to move? Probably not, right? You're going to be like, I'm not going to give up my interest rate as much as I'm not going to move from my house. So from that aspect, what's going to happen is that, people are going to stay put. Our problem is not having enough supply. Well, if rates go too high, any of the local people that want to move from house A to house B, you know what they're going to do? They're going to call their contractor to renovate their kitchen. And they're going to add a bathroom to their bedroom that they want. They're going to renovate their house, keep their interest rate, and it's over. Your supply, I see a big challenge with getting the supply back. It takes too long to develop neighborhoods, these massive neighborhoods. And think about construction costs. Part of the reason, I know the pandemic caused all sorts of supply chain problems, but look around your neighborhood, drive around different neighborhoods, look at how many people are renovating their houses. Like I drive around my neighborhood, there is so much construction going on. And I don't mean new construction, some of it's new, but so many people are renovating their houses. They're taking supplies and contractors. We don't have enough skilled labor, right? We don't have enough people, we don't have enough electricians and plumbers and HVAC technicians and framers and painters and everything. We do not have enough labor supply to satisfy the demand out there of renovations and new construction. So not only is the supply of materials, meaning wood and shingles and decking and everything, not only is that kind of a challenge, but supply of labor is a big challenge. So, good luck. Try calling a contractor and get them to come to your house this week. It's hard. So from that aspect, I just don't see where this is going to, I think the demand could slow down with higher interest rates, but I think it's going to just stifle the supply the same way. So it's going to cause this sort of balance. I feel like the bigger challenge might be for agents. If we can't get people to move and they really go stationary, I think we're expanding the longevity of people living in houses right now. A few years ago, people are like, oh, I lived in this house for 2 years. Now I'm going to move to this one because rates were lower. But if rates are higher, it takes away any sort of financial incentive to maybe move to a nicer house for the same payment. Now people would have to move to a lateral house for a higher payment, which they won't do. So I think it's going to, even if the demand slows down, the supply will stay down with it. And I read Sean's comment about a hurricane. That's obviously on the coast. We're always at that risk for that. I don't wish a hurricane on anybody along the Gulf or, along our coast. That is a local influence, not on a national level. But if you look at all of these markets right now, all of these markets are driving higher, right? So even though Charleston is maybe not the cheapest place to live, it's still cheap relative to some other locations. Connecticut, New Jersey, New York, especially when you add in property taxes. So we look cheap compared to some areas, even if we look expensive compared to others. So those areas that we look cheap, those are places people want to move from to us. So these people are coming in. I've never seen so many cash deals. And think about it, all these cash deals are happening with really low interest rates. So people have so much cash, they're like, well, what else am I going to do with this money? I'm willing to tie it up on this house, even though I could borrow at 3.5%. So it's amazing how much cash is still flowing, even though the rates are so cheap. So the cash, if rates go to 4.5%, 5%, you might even see some more cash deals because now people have more incentive to go ahead and not have a payment, at 4.5% or 5%. So, we're in this for a while. I don't see where anything's changing this year. Obviously there's a political environment that things could change. We'll see what happens with tax laws and everything else, but from an aspect of we're not anywhere close to getting out of this low supply, high demand. We've got a long time to go. And I mean, even if we and I expect, this winter when we hit that holiday time period, it's going to slow down, but just on a seasonal basis. But I think we're in this, high demand period of time for this foreseeable future. And I can't see where, if you wait as a buyer, you're going to get a house cheaper. It's like, I don't see how that's possible. Lynn has a question. So do you think they're going to going cash to get the deal? And I mean, they could be like writing an offer and proving they have the cash, but then coming to the side. But I still know a lot of closings that are happening as cash. But yes, they might say, here, I've got the cash to prove that I can buy this, but I'm going to borrow the money because it's cheaper, or they could refinance after closing. So yes, that's a possibility, but it also shows how much money is sitting on the sideline out there. And think about it, what's changed in dynamics is people haven't been going on vacations as much, and they haven't been spending money going out to eat as much. So people have all this cash flow that they're trying to figure out what to do with, and they're either renovating their house, they're thinking about buying a house or saving money. So this whole cash flow has changed from the entertainment, food and bev industry to housing. To some degree, that's what's happened. And then with some, not all areas, but some areas of the country, the kids still haven't gone back to school. So, and people are working from home. I mean, I was just up in Greenville. I was looking for a business person somewhere, and I didn't see them Monday through Wednesday. It's like, where are all the business people? It's like they're working from home. I was in downtown where you have banking and everything else. And like, I didn't see any office lights on. I didn't see anything. So, people are putting so much more value in a home because that's where they teach and that's where they work from, and that's where they're spending a lot more time. So part of what's happening is the intangible value of your house has gone up significantly over the past year. So all of these are driving factors of what's happening. So, well, I don't want to take up any more time on Friday, but if anybody has any other questions or comments that they want to put in, you're more than welcome to. But again, I think it's important at least once a month you look at these numbers. I track that active count every day. So every day I'm watching where those numbers are because that's telling me which direction we're headed. And I feel like we're in this bottoming out on inventory, but it's not like I can't call the day, but I think we are in that phase. And maybe it's part of the seasonality that we're starting to put more houses on the market, but the demand is absorbing as fast as we do. So, well, everybody, good luck out there in this crazy real estate world. And we'll do this again next month, but I'm always around for any questions. So everybody have a great weekend. Thanks.